Welcome back to Investing with Saraan. Today I'm going to teach you something that I wish I knew when I turned 18. During the pandemic, there was not much to do, and personally, I was really bored at home. One day, my friend introduced me to the idea of stocks while watching the NBA playoffs with the Lakers. Personally, I was very curious to use it as a secondary source of income apart from my job. Therefore, I started doing research on it. I found out there were 3 different types of stocks that you could invest in. These stocks included growth stocks, value stocks, and dividend stocks. Dividend stocks are my personal favorite, and I'll be talking about this in the video. But before giving out the explanation of dividends, I want you to punch that subscribe button below and drop a like. This helps YouTube know that you're enjoying my videos and will recommend them to you more often and to the finance community. Now, enjoy the video. So the first question that you may have in your mind is to understand what a dividend is. A dividend stock is a stock that pays you money for just owning their share. You are technically partial owners who have invested in their company and their future. They reward you with money that will be added into your investment account. Some examples include Coca-Cola, McDonald's, and Ambridge. Using these dividends, some of the YouTubers that I watch earn about $1,000 a month with dividends, and I'm trying to do the same. Personally, I've only started investing in the start of September and have already received $70 worth of dividends. The only thing I had to do was to understand how to purchase a stock using Questrade and Wealthsimple. Dividend payments can occur either annually, semi-annually, quarterly, or even monthly. By getting these payments, individuals can get extra cash to buy things such as their morning coffee. One thing to understand about dividends is that a company is not obligated to pay these amounts out. They can reduce payments at any time or even ultimately stop paying dividends in general. This actually happened to a well-known company this year known as Disney. You should also understand that by owning a stock, when it's paid, does not always mean that you will be getting that dividend. You must purchase them a couple days before the record date. The reason for this is because transactions that deal with stocks usually take a couple of days to go through. Therefore, to receive a company's dividend, you must buy that stock before the ex-dividend date. Down below, I put the meaning of the most important dates for dividends. When you receive dividends, you can also choose the option of the dividend reinvestment plan instead of receiving cash. Using DRIP, you can use dividends that are earned from eligible stocks and use it to purchase more of that stock. I've personally done this with Questrade, where I used DRIP to purchase additional shares of Ambridge without getting the charge of $4.95 for their trade fee. I personally love this as it helps my account accumulate and earn compound interest. A major reason why I invested in dividends is because it's consistency. Dividends are paid out generally whether there is a bull, uptrending market, or a bullish, downtrending market. There are obviously some exceptions, but usually this is the case. This really helps people when they experience markets like the one we had in the start of the COVID-19 pandemic. People have measured the benefit of a dividend stock by using the dividend yield. The dividend yield is a return on asset within a year expressed as a percentage. For example, if we look at the stock, the Coca-Cola company, ticker symbol KO, it has a dividend yield of 3.03%. This was calculated by using the sum of the last 4 quarterly dividends divided by the price of the stock and then multiplied by 100. In this case, it would be $1.64 divided by $54.48 times 100. Using this, investors can easily compare the stocks and see which stocks give a better return for their purchase. I've done this while comparing dividend stocks such as Ambridge and the Coca-Cola company. It's also important to consider researching stocks that are continuously growing and increasing their dividends over time. I personally like dividend stocks that are considered dividend achievers, dividend aristocrats, and my favorite, dividend kings. Dividend achievers are dividend stocks with 10 plus years of consecutive dividend increases. Some examples include Best Buy, Polaris, and Hasbro. Dividend aristocrats are dividend stocks with 25 plus years of consecutive dividend increases. A few examples include 3M, Walmart, and PepsiCo. Dividend kings are dividend stocks with 50 plus years of consecutive dividend increases. A few examples include Coca-Cola Company, Target, and Johnson & Johnson. I hope this video has helped you learn about the basics of what a dividend is. If you want to start being a partial owner of several companies as well, and want to earn dividends, use the link in the description or use a code on the right of the screen. This code is a referral link for Wealthsimple. Wealthsimple is a commission-free investing platform that is great for beginners and those who do not like paying fees for purchasing stocks. By depositing and trading at least $100 worth of stocks, we both get $10 for free. Subscribe down below for more investing videos.